Good afternoon, and welcome to this, the second of our Ramping Up series, looking at the electrification of road transport, both here in the UK and across Europe. I want to thank all of those of you in the room here with us. I can't imagine sacrificing a Monday afternoon for this wonderfully scintillating topic, but I appreciate your coming, and also all of those who are joining us online. Thanks for coming. We're going to spend about 40 minutes, I think, on a little panel discussion of some of the topics that are certainly circulating around the investability of electric vehicle charging resources. And we're going to have time at the end for questions. And I really encourage those questions, because in this very short amount of time, we're only going to really touch on the issues that are important. And so it'll be really valuable for people to come back with those questions towards the end. I'm Alex Georgiana. I'm an associate director here at Steer, and I lead our practice in the development and funding of EV charging resources, which is a word I'm now using on purpose these days. We are now crossing an inflection point, after which the uptake of electric vehicles will be much faster than anything we've ever seen before. The UK's EU ZEV mandate and the EU CAFE regulation are going to compel predictably increasing penetration of new car sales, leading to a total ban on anything but zero-emission vehicles by 2035. Now, that's not something that anyone in this room isn't aware of. And we're looking at perhaps 90% penetration in electric vehicles of our road stock by 2050. In considering this inflection point, I think it's rational to ask the question, how are we doing? And I should say that those of you in the room have got some slides there in your laps. People online can see them on the computer, I hope and I think. How did we do in 2024? Well, here in the UK, we did very well. Although we didn't quite make the 22% trajectory in the ZEV mandate, government will consider this a success in that they had no cause to penalize any of the manufacturers for lack of pushing electric vehicles into their offer this year. Across France and Germany, the story is a bit more mixed, particularly in Germany, where a reduction in their EV grant and an abrupt termination of that grant at the end of 2023 really impacted uptake of electric vehicles in 2024. So as we look forward to 2025, what should we expect to see? Well, the battleground is moving a bit from the UK out to the rest of the EU. The ZEV mandate came into force last year. The CAFE regulations will come into force this year. And although they're calculated somewhat differently, we should be looking towards about 25-ish% penetration of new car sales across all of Europe and the UK this year. As we look towards the next 10 years, this inflection point really becomes important. That rapid expansion of the battery electric car park drives demand for charging and demand for the investment that's going to build those resources to deliver that charging. So here this afternoon, we've carved out a quiet moment to think about how is this going to come together. We've calculated that we're probably looking in Europe at an additional 40 billion in investment required by 2030, and another 40 billion in the 5 years thereafter. So we asked the question, where is this capital going to come from? And how is the industry going to evolve to attract that capital to commercially viable ventures? Fortunately, we have a panel today of 4 individuals who are far better equipped than I to comment here and willing to give up part of their Monday afternoon. Please welcome David Scribner. David is a partner with Cameron Barney Herbst Hilgenfeldt. Priya Varapan is the Managing Director of Infracapital, a European infrastructure investment firm. Dr. Giulia Cavalli is the Head of Asset Strategy in the Global Structured Finance Department of SMBC. And Vicky Reed is CEO of, she just got a promotion, of Charge UK, which is the representative organization of CPOs here in the UK. I wonder if I can start by asking you all each to perhaps describe your background a little bit more and really touch on the background that your organizations have with this emerging sector. David, do you mind starting?
Sure, happy to start. My name is David Scribner, partner at BHH. Very good job, Alex. So, I have a background, I'm an energy banker. Probably the easiest way to sort of describe my background. Maybe my background as well, you might be able to hear my accent. Behaviours, consultancy experience before. I really had an opportunity 4 years ago to sort of transition into energy transition perspective. And I had there at CPHH. What we do effectively to help CEOs look to match a suitable investor for the CPO risk profile. So we'll get on to sort of different niche sort of elements within the sort of CPO profile and what's suitable for which type of investor, but we're really sort of acting often on the sort of company side.
Shall I go next?
Thanks.
Thanks, Alex. Priya Varapan, as Alex says, I'm a managing director at Infracapital. I've been with Infracapital about 3.5 years, and prior to that, I've been in the infrastructure investing and advisory space for about 20 years in a number of capacities, but looking across transport, energy, social infrastructure. But in the last few years, I've been quite focused on electrification of mobility. And Infracapital, for those of you who are less familiar, are a mid-market manager of infrastructure equity. So looking to deploy that into transport, energy, and digital subsectors. What we've done in the EV space is we made 2 investments. We've invested in a Nordic CPO called Recharge in 2020. So one of the relatively sort of early movers into this space of infrastructure provision for EV charging. And we've also made an investment into GridServe, who you'll probably be more familiar with, UK provider of en route charging services. So it's a space that we, spend a lot of time on and dwell on these issues frequently.
Thanks, Alex. So my name is Giulia Cavalli. I'm head of asset strategy at SMBC. Have been with the bank for over 16 years and always looking at infrastructure, and EV charging infrastructure quite naturally fell into the sector. And around 7 years ago, we started looking more seriously at EV charging and really had early discussions with investors when it was still only in equity play to really understand what were the structures, the funding structures. We looked at the first time when Allego came to the market to see how we can finance it. Unfortunately, at the time, we were not really ready yet, but when it came again to the market, we looked at things. Since then, we have done some 6 deals, not just on EV structure, but also on fleets and across Europe, not just UK either. And it's been really interesting to see how the sector has evolved and is still evolving and what type of funding structures are coming to market.
Hi everyone, yeah, I'm CEO, not CFO, which would be a really bad move for me. Hi everyone, thanks for having me. So I'm bringing a slightly different perspective. So Charge UK is as you said, is a industry body representing the charging sector. So my perspective here is to really look at the kind of political, regulatory background here. And I think I've worked in many very different sectors where all these things are pertinent, but I think no more so than in this sector here. And so Charge UK, we were established 2 years ago to represent what is still a very young sector, and it's really only a decade old, and it's got an incredibly important role to play in this energy transition we're all looking at here. We have 43 members, most of whom are charge point operators, but we also have operating in the public space. We also have some manufacturers, some payment providers and others working with us. And I see our role is really 2 things. One is to talk to everyone really, to consumers, to the media, to decision makers, politicians, etc., to remind them how well the sector is doing. A huge amount of progress is already made, and that's the easy part. The harder part, but more important, arguably, is to talk about what we need as a sector to do more. We know we need to have widespread availability of charging. It needs to be affordable and accessible and easy to use. And I know all our members are working really hard to do that every day. But there are some things that we need to work with government and others to make that possible. So I'm advocating on behalf of the sector basically, and I'm sure we'll touch on lots of those things in our discussion.
That's terrific. Thank you very much. Thank you. I wonder if we could jump in. I think what we're going to do is have sort of three broad questions, and I might ask each of you to sort of color our total response to that question, if I may. And we're going to start off with kind of the $64,000 question, although that number is probably not right. And really talk about what drives the investability of EV charging. And David, again, I might just start with you and come back down here. You've done several mandates, both buy and sell side, for EV charging and energy and broader energy transition. You have a nice kind of perspective on those different aspects. I wondered if you could just talk a bit about the investors in these deals that you're working on. How do they look at the investability of these ventures, and is it different between various aspects of energy? Maybe not.
I think it's changed over time is probably the place to start. I guess Priya was mentioning you made an investment a number of years ago into sort of the Nordic EV charging space, which is obviously ahead of the rest of Europe, and then followed that on with GridServe. I think that investors are they understand that this drive to adopt electric vehicles is coming, and that's not really going to slow down. So 10 years from now, I think people understand that if not everyone in this room already drives an electric car, I think this is probably not a good population set in terms of EV drivers, but if not everyone in this room drives EVs today, 10 years from now, we think that almost everyone will, and that would sort of go well beyond the walls of this room. So that market demand is there, and it's going to come. I think where investors tend to struggle in the space, especially at the moment, is when is that demand going to come? When is Chris going to show up and charge his car? How do you predict that demand? And we're seeing different sub-segments within EV charging, with probably at the moment a lot of interest in what are the fleets doing? How do you sort of get into the sort of fleet revenue stream where you have slightly larger vehicles that are charging on a daily basis and repeatable routes? So I think it's complicated. It's not sort of how do you fund EV charging in Europe? It's how do you fund this specific use case of EV charging? What's a suitable investor for that? And they can range from venture capital to private equity and infrastructure to pension funds. So it's a complex question, but I'll park it there for a minute and happy to sort of add a bit more as we sort of go on, if that makes sense.
You'll have all the opportunity you need. Thanks.
Mm-hmm.
Priya, I wonder if I could ask you kind of the same question. You know, what impacts the investability of EV charging? And we were talking earlier about sort of public policy, public programs. How does that have an impact as well?
Yeah.
I wonder if that's relevant to you.
There's quite a lot to unpack in
Sorry,
this
I know.
question.
That's my job,
Let's
is to
start
ask
with
a big question.
Let's start with, I guess, the cycle, because I think clearly we've been through a bit of a cycle over the last 5 years or so in terms of investability in the sector, where there was a sort of peak of capital flow and valuations attaching to that, which was brief, and then maybe a falling away of that capital in interest as it became clearer that, you know, maybe the adoption rates were not as predictable, not as finessable as typical infrastructure investors would like them to be. And I feel like we're maybe emerging from the other end of that spectrum as we, to your point about inflection, see that actually this trend is not reversible, and there are going to be some winners in this space, and those winners will attract sort of the bigger pools of capital and the lower cost pools of capital. And I guess what is then going to drive where that goes? I think, you know, scale is going to be quite important in this market, and I think we'll start to see some of that activity. Path to profitability or actual profitability is key. So people are looking for, what is the route? What am I going to have to do to achieve a profitable business? And some CPOs are sort of touching up against that already. But if you can't demonstrate how that's going to happen, then it's going to be more difficult. And I think this is where your point about what public sector support does, what it can do is provide downside resilience in terms of products that say, I'll support your usage, I will support your cost base, I will make it easier for you to get through the development cycle, through grid planning, all of those things. But it can also address the demand side and the adoption cycle by saying, let's be consistent about what we're saying that gives the market the right signals. Let's try and stimulate demand to the best of our ability. And I do think that the current government has clearly helpful intent. Whether it has helpful action yet is probably the missing piece at the moment. So yeah, a lot of a confluence of all those things that come together, and clearly you have to have a good product as well. And I'll stop there.
That's terrific. Thanks very much. Julie, it's sort of the same question to you. And one of the thoughts I had is SMBC, of course, is working across Europe. So maybe you can even comment on different asset classes that may have similarities, but ultimately the same question, really. What drives the investability or the bankability of these ventures?
I mean, bankability is what David and Priya outlined, is pretty much for a lender, the base case and the assumptions and the growth perspective and how quickly the assumptions of the base case are materializing. And I think at its beginning, everyone was quite not bullish in itself, but I think we expected the growth to be much faster than it materialized. So I think there was a lot of rethinking of what is the right base case. And that's where also policy comes into play. So I think we saw a big drop as when the first announcement was of a delay in EV rollout, where suddenly the initial expectations of how fast we will see EV cars growing had a huge impact. I think that's really crucial to see the base case and making good assumptions. Well, then plays into play is also the size. So what is a good size of a company that is investing it? So you can't just roll out a couple of these charging stations. It needs to be a proper size to really make sense. And we see quite a few really good ideas, but too small in itself. And because they're so small, it's very difficult to really predict when they would actually start making money and therefore able to repay. I think one of the good things in the sector is when we initially started looking at it, a big concern internally from credit and management was technology risk. And this actually has pretty much fallen away, which is a good thing for the sector, because initially there was a lot of concern. Will these cars or will the battery really last for the tenor of the loan or of the agreements that are in place, which is quite rare in other sectors. We worry, I feel, much more about technology. So this is one of the issues that has not fallen away as such, but it's not the biggest focus anymore. What we have seen is lots of different ideas of how to finance it. And what is a hugely important element is really what other revenue stream is there if the EVs are not coming. So if the charging is not there, what is there else? And we see other transactions where you have a former petrol station having still the revenue income from the petrol, but at the same time installing EVs. So if you don't have the income from the EVs, you still have some other revenue streams. And I think these elements really help to build a case and therefore the financeability.
Vicky, the question is a little bit different to you, isn't it? Not a lender, not an investor, but representing these CPOs who are out there seeking capital to grow. I wondered if you could comment a bit on what the CPO's experiences have been in raising capital and sort of where we're going with that, particularly with a huge chunk of Levi stuff coming out the next year and then continuing growth thereafter.
Well, I think I said in my opening comments that I've worked in lots of different sectors, and this is probably the sector where actually that clarity around the public policy environment is the most important. I think for three reasons, really. I think, as you've always said, it's not a question of if this happens, this transition, it's going to happen. But I think for charging, it's important because we need to have that charging infrastructure before the cars are there, and that's tricky. And that means that we have to take a risk. We want to take a risk knowing the kind of the basis of that risk, and that's why things like the ZEV mandate has been so important. So we can't be at the same pace as the EVs coming on. We can't be behind them. We have to be ahead. I think the other thing is, there's obviously a wider policy challenge here, which is we're trying to do this transition not just because these are great cars and they're nice to drive, but because there's a kind of climate reason. So we can't take our time. There's a pace at which we need to go, and so the government does need to kind of intervene to try and push. And also, it has to be equitable. So it's not good enough to just, I think, let charging rollout where perhaps it's most obvious at this point in the market. It has to be more equitable. That's where Levi comes in as well. So policy has a particularly important role. I think it reassures me that some of the things you've been saying here is what I've been hearing from our members as well. So at least I've been reporting the correct things, which I think it's quite simple, which they want certainty. They want to know where they're going. If everyone is taking an educated bet or a guess or a risk, it needs as much information as possible to make that bet correctly. So I think it starts from the very top, which is, as you said, Priya, does this government want this to help? I think we're okay there. We're fine. There have been some wobbles along the way, but I think recent again, the government has said, yes, we want this phase out to be 2030, with 2035 being the end of all hybrids. That's great, I think. And then beneath that, you're looking for things to try and help you, to give you more confidence. So actually, great, we know when the end date is. Well, how are we going to get there? How many cars need to be sold at each different point? I think we're a little bit wobblier there, and we're working on it. And then you're down to the kind of more sort of, I guess, the hygiene factors, which is the irritants around grid and planning and those sorts of things. And you have to sort of work from top to bottom. If the will is not there, then we've got a big problem. If the confidence is not there, again, you're going to hesitate. And once you've got those things in place, then you need to kind of remove the barriers. I think we're lucky in this country, in the UK, that we're in a situation where that first question is settled. I think there's some work to do on the second too, and that's what my members have been saying to us about they want us to work on.
Thank you so much for that insight. I'm really overwhelmed by how quality we're getting at some of these questions. Thank you so much. The second question I wanted to talk about is, this is an evolving industry. And what do we think eventually the most efficient structure will be for not just funding these sort of ventures, but how will the operations of these ventures be sorted? And we've talked a little bit about, there's a whole bunch of different options and a whole bunch of different demand types that we're talking about specifically. But David, I wondered, we had talked on the phone the other day and you had talked about infrastructure. And is this infrastructure? And it left me going home that night sort of scratching my head and said, I think that's an interesting question that needs to be explored a bit more. Would you mind taking that up?
Yeah, sure. It might not be a popular topic in this room, to be honest, looking around. But I think when you think of what is infrastructure, and Priya will know this better than I will, so I'm not going to try and lecture too many people on this, but I think elements of EV charging have infrastructure elements to them. Depending on the use case, some are lean themselves better towards infrastructure investors and others less so. I think really, and it won't be sort of surprising to hear this. I think what is the sort of offtake, if you like, that's the sort of biggest risk factor in terms of the EV infrastructure installation. So the point where, when does Chris show up to charge his car? That's the sort of biggest risk, and the one that sort of misaligns the most with infrastructure investors. But that would be sort of taking a very sort of high level view, saying, okay, 30,000 foot view, I don't know when Chris is going to charge his car, so I can't invest in this because I don't know what the demand is. But when you actually dig down into it and just sort of more niche sectors and even regions and locations, everything looks a lot different. So is it infrastructure? I think it can be. I think a lot of it struggles to be, though, as well. And it depends on sort of charging demands. And I think we're getting more data, so that's helpful in some regards. I think 3 years ago it was much easier saying, okay, EV cars are coming, adoption's more or less on track. We need these many chargers to sort of service this car fleet, and we think the utilization curve looks like this. And a bunch of business models got funded on that basis. we funded a lot of businesses on that basis with investors as well. And what we were hoping was when we get more data, this is going to be easier. And what we actually found is as we get more data, this is actually a lot more complicated, and the sector is super, super complex. And you'd be seeing sort of behavior at one type of charging station that you wouldn't expect, and then you get a really good outcome somewhere else, and you're trying to kind of chew through the data to understand where this sort of offtake is coming from. And actually having more data has proven to be probably more difficult to convince infrastructure investors that across the spectrum it is infrastructure. Where you have high traffic areas and you have limited availability for sites, that one probably lends itself to infrastructure. So we'll let Priya talk about one of her investments maybe, which she probably feels like is infrastructure. Where people are going to charge naturally is either going to be where they wake up or where they go to bed, or if they need to, out on the road. So when you think of a couple of companies that I see represented in this room, not everybody has a driveway. So if you're parking near your house and you need to charge your car, that could be infrastructure. We're seeing the sort of hotel segment, I think, being interesting. But the challenge there is you're typically using slower chargers, and you need a lot of slower chargers to generate a sufficient return to kind of have sufficient scale. So I think it's complicated, I would say. I think infrastructure investors are intrigued by the sector. Some have already deployed into the sector. And now it's a sort of which models are working, which ones aren't, and how do we sort of improve from here? And then to Priya's earlier point, okay, now this model works, we have to scale it. And that's where the capital is going to chase.
I really like your answer. On one of these slides, there's a comment that we're all in the business of anticipating where, when, and how drivers are going to choose ultimately to charge their vehicles. And I had never thought about that comment in terms of, is this infrastructure or not? You know, does this model appeal to this investor or to that investor? I think that's interesting. Thanks. Priya, it's your turn.
Politically correct answer. But yeah, I mean, I think we agree broadly with David insofar as, you know, clearly we're not in the world of a regulated asset base, you know, utility or a heavily contracted PPP environment. We're not in that environment, obviously. So I think from our perspective, we'll try and sort of slice the risk profile to identify what are the things that you can pin down and identify as infrastructure, and what are the elements of that. So predictability of demand, we've already talked about, and the high traffic turn-in rate environments where you know you have to stop clearly are ones where you have a better sense of what that volume is going to look like. The other aspect that, you know, we've thought hard about is barriers to entry around capital cost. So sort of capital intensity is another feature, obviously, of infrastructure projects, and where you have a need for high power charging, ultra rapid, HPC, etc., that capital bar is higher. So once you've established your presence, then, you know, in terms of defensive moat, be it en route or otherwise, that HPC market, from our perspective, was viewed to sort of demonstrate more of those infrastructure characteristics. That's not to say that other models can't be good businesses, but do they qualify as your infrastructure box or not? You know, that's one of the elements of it. So, and I think I'd agree. So they're at home, en route are the two areas where you can see that use case more clearly. The in between, I think, is everybody sort of feels there is a place for it, but we don't exactly know how that's going to pan out. When are people going to charge at Sainsbury's versus charging at David Lloyd? It's hard to call that one now. But again, not to say that they won't be successful businesses.
That's terrific. Julie, it's sort of the same question to you, but really from a banking perspective, it might be somewhat of a different answer, actually.
I'm not sure it's so different to what David and Priya said. I think it, first of all, depends how do you define the infrastructure. There are already tons of definitions of infrastructure out there. And I guess each the bank might also put it internally into a different sector. So some keep it in infrastructure, others might keep it in a different section. For us, it sits in the infrastructure, in the structured finance department. And it then really depends on the structure of the transaction itself. But it's not, I mean, I must say EV charging in the sense of how do you define it it's not different. So, and I mentioned it earlier, I think to you, student accommodation. Some put it in infrastructure, others put it more into real estate. It really depends how you look at it, these things and how it is structured. Most structures that we have looked at these days and we have funded to date are having more infrastructure elements to it. And some of them have very strong elements. If I look at the Deutschlandnetz in Germany, very heavily, pretty much looking more into really frameworks and subsidies on these elements. And others is really purely volume risk. And there, as we heard, it depends. You just don't know. There you can have very good predictions. But then what lenders will do is building into their base case and into the structure certain draw stops or other elements to make sure that we are not just lending, but we are actually seeing the progress or similar to really make it in a bit more probably what we would see then as infrastructure.
So Vicky, in your manifesto, the attraction of private capital is one of the big themes. I wonder if you could just expand on that for us a bit.
Yeah, so I mean, I'm going to sort of answer, I guess, the question in a slightly different way and come back to yours, which is one of the big questions I talked about earlier. This is really important for government, and they know they have to have a role. But the question is, where do they need to get directly involved, and where do they need to turn to private capital? I think, when Charge UK launched 2 years ago, we launched with a commitment of £6 billion between our then 20 members through to 2030. We're now at 42 members, so I suspect that number's higher, but that number gets used repeatedly in sort of political circles to prove there's a very high appetite for investing for private investors in this space. So a lot of the discussions we have with government is about what can you do to either encourage that investment in, or at least remove the barriers which are inhibiting it from progressing, and where do they need to get involved directly? I guess you mentioned Levi earlier. There's also another fund which is called the Rapid Charging Fund, which hasn't made as much progress. But we spend a lot of time thinking about, well, how do we focus government to look at where they get directly involved, and that's really quite difficult, I think, at this very fast-moving early stage of the market. Where do you put money in a way which actually makes a difference, but it also doesn't trip up the private investment that's coming in? I think we can probably talk in some detail about whether Levi and RCF have succeeded or not. For the most part, actually, we talk about attracting investment from overseas. We're competing with other countries. We talked about France and Germany. We've got to try and attract investment into this country, and also away from different sorts of asset classes as well. So I think this government and also the last one understands that. Whether, again, they always stick to what their beliefs are and follow through, I don't know. I think some of the messaging around the ZEV mandate recently, which is the quotas you mentioned, are a little bit mixed. I think, again, that end goal is there, but there's a little bit of work to do to make sure that private investment is really confident enough to follow through. So, I think government itself is still trying to work out what role it has to play, and we're trying to shape that decision.
Thanks for your efforts there, really. I just wanted to kind of close. We've gone through actually greater depth than I expected, so thank you for that. But I wondered if I could just ask you to sort of close up here with some sense of what's the biggest obstacle that you see, and what can be done to address that obstacle. I'm sorry, I keep asking you big, broad questions. I hope you don't mind.
So biggest obstacle and what can be overcome, how that obstacle can be overcome. It's a good question. I'm going to pause here to let my brain catch up. I'm going to start on the positive side. So I think sort of as we started, the market here is coming, and the need for this infrastructure is certain. It's the timing of when that infrastructure needs to be put into the ground, which is uncertain. There's obviously regulations that are trying to push that forward. I think maybe to Priya's point, supportive government, check. Actions that are actually driving this to move faster. That's probably what we need to see more of. Having stability around the sort of regulations that being put out there as well. So not sort of moving things back and forth and back and forth. That's obviously unhelpful. And I think what's going to attract the next probably large amount of capital into the sector is how do you unlock, and I said this earlier, in terms of the fleets. So it could be fleets of NHS vehicles, it could be fleets of Royal Mail, obviously all of the large corporates in the UK and Europe as well. How does that electric vehicle charging infrastructure get funded? Who's funding it? And is that going to happen at the sort of public access level or depot level or some combination of the two? I think that's probably the biggest opportunity for the sector, and everyone's thinking about how they can get their sort of hands on it, if you like, in terms of that predictable demand. That's probably going to drive the largest amount of infrastructure investment into the sector over the next sort of 2 to 3 years. But I think ultimately seeing some supportive action from the government to sort of try to accelerate the adoption of EVs, both on the individual side, which I think actually it's hard to push a single individual family to sort of adopt an EV and have massive scale. But if you are sort of pushing it on the sort of more on the company side, when they're sort of running multi-thousand unit fleets, that can have a larger impact. So it's not really a well-framed answer, but that's sort of where I think the sort of infrastructure money is going to come from, and where the government pressure could probably accelerate a little bit.
We've got time tomorrow morning. I've got to go talk to the Fleet 200 to talk to them really about shrinking diesel availability and what pushes their ability to electrify. And a lot of that is around charging infrastructure. Priya, I wonder if you mind.
Around the cost of the vehicle.
Sorry?
A lot of it is also around the cost of the vehicle.
Yes.
Yeah. So I guess one way of thinking about it is that if you remove the barriers to execution and you remove the barriers to adoption, then the barriers to investment will also naturally fall away. I'd probably say so. So what are the barriers to execution? We've talked about permitting, planning, grid. Clearly, those things are very hackneyed almost, but they are true. They are still barriers to getting things done and getting them done quickly. I think there are some low-hanging fruit like signage that hasn't, could be addressed easily, hasn't yet been addressed, and that would make a big difference to the industry. Even more guidance and data around where do you want the charge to go, where is the adoption, and then driving the adoption. I think David's touched on, there are plenty of measures that can be taken to stimulate demand that vary widely, but ultimately if the industry can see some clearer path on adoption, then it will be more confident to invest. So I think it is sort of trying to take down the individual pieces one by one, and then ultimately unlocks the whole.
Does this inflection point concept make sense? Is it important? What do we think about 2025 ZEV mandate for 26%? Is that a sort of a meaningful goalpost? Does that tell us something?
I think it's still a hypothesis, isn't it? And that's the issue. It's trending in that direction, but something could change tomorrow that sends us in a different course. Ultimately, we're all probably ending up at the same place, but that kind of what happens year on year is quite influential for the amount of usage that CPOs actually get, and therefore the amount of capital they have to invest.
Thanks for that. Julia, it's sort of the same question. Biggest obstacles and how do we fix them?
I think just to add on the point that Priya made, the permitting and really the getting the grid or the station, the infrastructure into the ground has been really an obstacle for quite a few, which therefore then stops the speed of rolling out. I think that's one obstacle. And I think one of them where probably political support could come in is what we discussed quite earlier, the base case. So what if we don't have the base case and therefore lenders have in their documentation to stop the funding, which then obviously is like a vicious circle, because then you can't continue with your rollout and create the revenue stream that you want. So if there was something which, for whatever reason, the rollout is not as it would be, if there was some support in some type of grants or other ways, which then helps bridging until we are back to the stage where the base case was and the funds flow. That might be something to overcome.
Thanks. And Vicky, I wonder if I can finish up with you here. Just before we started, I'd made a dumb comment. I had said that that I thought the public consultation around the ZEV mandate hadn't changed things too much, acknowledging that there are new flexibilities. And I think you told me quite clearly that I should think about that a bit more.
I mean, this is the job. So this is the problem with regulations and politics, which is it's all very complicated and nuanced. I think the end goal is now set, and actually that wasn't to be taken for granted. If you look at different countries, some I won't necessarily name, but where things have changed quite a lot since January this year, where the kind of the wider mood music is no longer the same as it was before. That's now set. So I think we all know where we're going. I think the route to get there is more meandering we perhaps thought several months ago, because the government has given the car industry more options, more power to make its own way there. And I think that's what it was asking for. From our point of view, from a charging infrastructure point of view, that makes the road a little more difficult to see. And I guess, bringing back the different things here, you asked about obstacles and inflection points. I don't think we're quite, for me, the inflection point is at what point does the government need to stop pushing and the general public starts pulling and there's a natural momentum taking on. We don't have to worry about where the demand is. It's just coming at us thick and fast. I don't think we're quite there yet. The government can't stop pushing. But I think that the sooner we can get there, the better, because it takes us away from the vagaries and difficulties of politics, which is changeable, and we don't want change in this long-term sort of investment situation. So I guess our message to the government right now is, again, can we remove those barriers to individuals, to companies making their own decision? And they are mainly around affordability of the vehicles themselves, but also of charging. We've mentioned VAT, I'm sure, standing charges, other things that make it difficult to offer affordable charging. Take those barriers away and off we go, because it's a great product. It makes sense. And then we haven't got to worry about what does the ZEV mandate say, 28 or 30. It's going to take care of itself, but we're not quite there yet.
We can't ignore the fact that CPOs themselves have a role to play here in terms of making the customer experience a positive one, because that does translate to adoption, and if the kind of rate of success and the ambience of your charging environment and all of those things don't stack up for the user, then they're not going to use it. So I think that there is that element of it incumbent on of all of us to address that side of the equation.
Thanks so much. Priya, I know at the beginning I said I don't have the attention span to do this for much more than 45 minutes, but I've been riveted. This has been really terrific. And I threatened all of you with an opportunity for questions here at the end. And I wondered if we have any in the room here, and we can also take questions from the people joining us online. Hi, if you wouldn't mind introducing yourself and go ahead and ask your question. Oh, there's a microphone.
Thanks very much. I'm Barry Adley from PodPoint, formerly EDF. Quick question about how the panel sees investment in infrastructure. So you talked earlier about what is infrastructure and what isn't. We're seeing energy suppliers are increasingly interested in manufacturers and suppliers of electric vehicle charging in the home, and the new markets that are opening up around flexibility. I'm just interested to understand, how do investors like yourselves see flexibility in the domestic market in terms of how investable it is?
I would say it was on the exotic end of an infrastructure investment. It depends really on, what are the contracts that come with that? Is there an underpin that comes with it? What are the actual real assets that attach to that service that's being provided? So is there an actual physical thing that then ends up being able to be ripped out or not? So there's lots of you can create an infrastructure business out of flexibility from the home charging, I'm sure, but do you get underpins from energy companies that say, actually, if your vehicle to grid revenues don't stack up, was there going to be a floor, in the same way that batteries are traded, right? So it's not that it is impossible for that to be infrastructure. It's just you have to create quite a lot of conditions around it in order for it to stack up.
I would add to this, if you probably look at putting it out like smart meters we had in the past, then it is fundable. And smart meters were hugely funded by the market. And if you have similar concepts and structures, then I see it easily be doable.
One thing to that, I think on the commercial side, when you're sort of selling to in real estate investors that have 100 plus properties and you're sort of deploying at scale, I think that's when it sort of starts to kind of get more interesting for infrastructure investors, mainly just because how many houses do you have to put a charger into effectively to sort of get to, I don't know, 50 million deployed, right? It's going to be a big number. Whereas if you can sell to corporates through the sort of C&I stream, which is often slower, but you get bigger scale quicker.
What have we got here? Oh, Oliver, thanks. Hi. Let's hold on a second. We'll get your microphone.
Hi, yeah, Oliver Ely from Slowborough Council. My question is about scale. So you mentioned the importance of scale for successful sort of businesses in this sector. We sort of have been putting together our Levi tender for the past sort of year or so. Part of the market engagement for that, we noticed, or at least I noticed, there's a sort of tangible lack of scale in the UK market. Certainly for residential charging, there's lots and lots of smaller CPOs interested in that area in particular. We're signing 15-year contracts with these organizations. It's important for us and our residents to know, is consolidation required and is it coming in that part of the market? What sort of percentage of those smaller CPO players are likely to still be there in 15 years?
Yeah, it's a really good question. I think if we fast forward 10 years from now, having Charge UK represent 46, is it 46 or 42? 43 CPOs. That number is probably going to go down over time. We do think consolidation will happen. We think, so this is sort of a firm view of CBHH and my own personal view as well. We think the EV charging sector is well placed for consolidation just in terms of the tech stack and how the actual chargers integrate with each other, where you can adopt another company's chargers because they speak the same language. So the risk that you sign a contract with someone and then 5 years from now they get acquired by a larger entity, I don't think that's a material risk to your tender. You want to sort of obviously pick a CPO that can service companies and clients well today. And if they're servicing clients well, then they'll either continue to grow, continue to attract capital, continue to scale, and be attractive as a target from a larger player over time.
Can I follow that up a bit? When we talk about this consolidation scenario, because I hear about this a lot, I wonder what the value is of what you're acquiring. Are you acquiring a business? Are you acquiring a portfolio of investment assets that may be impaired in some way? It's just hard for me to understand, what the benefit is of acquiring this business.
I can take first stab. Yeah. I think there's a few elements to it. One, like you break it down into sort of what is the installed estate today and how does that perform? That's the sort of basic asset value. What does the acquisition give you in terms of rolling out more infrastructure from contracts that they've already won? And then one of the material drivers is if you've got a 50-person sort of team or a 100-person team looking after an asset base and you're merging with another similar size company, you probably don't need 200 people to operate that entire asset base. So there's substantial operating synergies, I'd say, between the two. And what you often see is CPOs will either completely outsource their IT and they'll rely on third parties to do that for them. And then other CPOs will build up that entire IT sort of know-how in-house. When you sort of see that, when you see the CPOs that are building in-house, typically what you're going to see is that they'll be the more natural consolidators in the market because it does take a certain amount of, I guess, IT knowledge and integration to actually bring all of this together and make sure you're not sort of dropping things on the edges. Yeah, I'm sure you guys have other views.
No, the only, I guess, factor I'd add to the list is maybe what your ambitions are around network coverage and recognition, because, an consolidation or merger or whatever it is of some description may give that broader network base. And I think it's probably early to say, but ultimately is brand recognition and coverage going to become an important feature, and loyalty in respect of user. So that might be something that is a consideration in respect of consolidation.
I like this framing conversation, and really your earlier point about customer experience that I sort of look for, you know, in management teams. Are you focused on this customer experience? Are you focused on, you know, allowing customers to build this into their lifestyle easily and without problem, quite frankly?
I would just add, with consolidation also, if you have contracts that are in place, you can't just easily break these contracts either. I mean, you still have your contract that you made with the CPO. Just because it's consolidated doesn't mean, I mean, it will then be coming down to how legally it is worded and framed. But I mean, once you have something in place, I wouldn't worry about that consolidation aspect. It's just bigger coverage or other aspects. It could be a good thing, could be a bad thing. It will to be seen at that time, but I wouldn't see this as preventing it from initially just entering into a contract. Sorry.
I wonder if there's any more questions either in the room or online. Yes, please. Oh, questions, Eddie. Please, Steve.
Oh, sorry.
Thank you. Steve Forster from Osprey Charging. I'm interested from an investor's viewpoint in what you see as the route for payback for your investment. Is it through IPO? Is it through revenue growth and payback through that? Or how do you think you'll be getting your money back, and when?
I think when we look at the core investment proposition, it is premised on a return from the cash generation of the asset ultimately. But it is unlikely that most investors are going to hold these assets for the long 30-year term or whatever their lifespan is realistically. So you are looking, with one eye to who is a potential acquirer in the future. And I think what we've tried to do, or are trying to do with our CPO investments, is to create sufficient resilience around that infrastructure proposition such that there is optionality for an acquirer who's looking at it with an infrastructure lens, and ideally with a lower cost of capital infrastructure lens than we have had through this process, because the proposition has been substantially de-risked and scaled. So that's one thing. And then secondly, leaving doors open for other avenues like consolidation or strategic buyers or IPO at the right time. It's about building the resilient, profitable business, which is going to be attractive to a kind of wide berth of potential acquirers.
I think we had a couple of questions over here now. Everyone's asking questions now. Maria, do you have a question you want to? So Maria is taking calls from the greater world here.
Yes. Hello, Maria Barasta, Associate Director, Commercial Advisory on Berside, part of Steer. So the questions online on the technical side: which model best suits the future of EVs, fast charging or battery swapping, business-wise?
Vicky.
So which fast charging or battery swapping?
Yes.
So I think they're probably, I don't represent any companies who do battery swapping, so I'm going to definitely go for the fast charging option. Unless someone would like to join and they do that, and I will change my statement. I think, and also there are more. Well, the word fast is a difficult one, isn't it? It's used interchangeably, and that is a kind of worms I've already been into, and it's very difficult to resolve it. I think one of the interesting things about the sector is there are so many different ways of doing this, and I think this is perhaps one of the challenges, which is nobody's quite worked out, the kind of the silver bullet approach yet. And it's interesting. I'm privileged to speak to lots of different companies, and they all assert that they've got the correct way. But I know, having spoken to 43 of them, that they can't all be right, or maybe they are all right. It's going to be a patchwork. And unlike petrol and diesel, we know where there's basically one way of doing it. You go to a petrol station, you refuel, and you move on. the optionality is almost endless. So I'm going to opt for fast or ultra fast or rapid or hyperactive, one of those ones, but probably not at the moment. Battery swapping.
I was just going to say, just on battery swapping in particular, it's not very prevalent in the UK, but if anyone took an electric bike here, those are typically battery swapped, if you like. So there are use cases for battery swapping. Is it just sort of general cars that we drive day to day? Probably not in the UK, but other modes of transportation for sure.
Simon Cordery from Places for London. We've just launched a joint venture, which I think some of you participated in at various levels, around ultra-rapid charging. We've just done that with Fastnet. My question is really around the sort of mass adoption piece, and particularly the interest that has grown in the last 18 to 24 months around fleets, be they delivering goods, services, or people. To what degree do you see the sort of predictability of the duty cycle improving the landscape for investability? Because to date, it's been quite sort of an evangelistic business, both in terms of the EV driver as well as the CPO. Everyone's been at it because they really believe in it, which is a very good thing. But the predictability of fleet use on a daily and annual basis gives a lot of hooks for investability. Be interested in your thoughts on that.
Yeah, I think Priya mentioned this. Vehicle cost is probably a big element of it. I think TCO, so total cost of ownership on electric trucks and vans, when that approaches diesel alternatives, and when that ultimately either goes below or is at parity through some sort of regulatory charges on the diesels, I think that's when you're going to see mass adoption. We're starting to see it on the HGV side. So we've got a few clients that are doing HGV, electric HGV, either charging or actually running it as a business. And the predictability of the routes is one element of it. Also, the batteries on an HGV are very large. So when you think of charging an individual car versus an HGV is sort of 6 times a car, if you like, in terms of charging capacity. So we see that not only in predictable routes, but in terms of the actual energy used as well, I think is quite compelling.
So we own a different business, Mary Energy. You may have heard of it. Part of that business is involved in the electrification of bus fleets. We've electrified a number of depots in London. And I think you see some really interesting things that you can do when you have that predictability of route and timing. For the start, you don't need as fast chargers because they're sat in a depot overnight, a lot of them. And secondly, that sort of static fleet overnight provides the opportunity for further revenue streams in terms of optimizing your time of energy purchased and also what you can do with grid optimization and ancillary services. So there are elements of that fleet piece that can be usefully used to improve TCO for fleets. They just need to get the kind of wherewithal to actually do it. In a lot of cases, that it's a knowledge gap and also a kind of funding gap as well that come together. But there's a lot of value to unlock there.
Maybe just to add, bus fleets, I think, is something, again, we have done quite a few of them, and it's something we see as growing very quickly. Other areas of fleets are a bit more difficult, and a lot of the feedback we receive is really the capex initially. The costs of an EV or a truck, or else it is in comparison to a fuel-based one, is still massive. So for a lot of companies, initially, it's already a question of this, and then the EV charging infrastructure for these. If that's not there, it's really difficult for them. Unless you have a very specific route you use all the time, it's really difficult for most of them. So I think once this is unlocked, we will see even more. I personally believe that fleets we will see much faster than probably on an individual car basis.
That's interesting. Maria, I think you might have one more question from the universe, and that might have to draw us to a conclusion here.
Yes, again, a bit more detailed questions, to be honest. How do you see EV charging infrastructure within off-street car parks? Any issues, partnerships with owners?
Chris can take the question.
No, I didn't either.
No, okay. How do you see EV charging infrastructure within off-street car parks? Key issues, partnerships with owners, etc.
Chris, do you mind jumping onto the panel here at the last moment?
Yeah. Could you remind me of the question again? Sorry. So as in the technology or the...
Again, I think business model or key challenges with EV charging off-street.
Okay, well, first of all, hello everyone, I'm Chris, I'm Connected Curb Chief Exec. I work with Vicky, I had the honour of chairing Charge UK, but I'm going to give you a Connected Curb only answer here. I suppose we would see it as you're trying to deploy charging infrastructure that serves the whole community, so we would just see that as one of the other locations where you'd be going and deploying charging points. The key question in that instance would be, what is the type of charging you're deploying? So are you deploying charging that is serving a 1 hour dwell time, an overnight charging dwell time, or one where you're sort of looking 2-3 hours? I think we've seen a lot of charging infrastructure that's deployed for very, very short turnover, and we've not seen enough charging infrastructure that really serves the specific use cases. So for example, in city centre car parks, you've seen a lot of really, really, really high power charging infrastructure going in. And I think in future, you might see some more slower or mid-range charging that maybe serves a 2-3 hour dwell time. So maybe some of the slightly lower power DC charging solutions might come out a little bit more. But again, you need to think of this as the infrastructure as it was talked about. You're trying to provide something that serves the user wherever they turn up. So Priya, you mentioned you're trying to improve that use case. At the moment, the use case is very much, or has been, driven by the CPOs. I think now most of the CPOs are really starting to think properly about what the use case they're trying to serve is. I think that's probably the big transformation that you've seen in the market in the last 2-3 years, is that movement to focus on exactly what the user wants, both in terms of the hardware that's deployed, but also the software solutions that are serving that hardware. Sorry, you put me on the spot there. I hope I did okay.
Thanks very much. You did very, very well. And with that, we made it to an hour, and I'm amazed. But I want to thank sort of everyone for coming, and in particular our panel, which now comprises David, Priya, Julia, Vicky, and Chris. But please, let's give them a hand. Thank you very much. That was nice. I think that draws us to a conclusion. Thanks, everyone.